OpenAI just blinked. A new report says its blockbuster IPO could slip to 2027, and that's what cracked the market last week. 4 more stories moved the tape. Let's get into it. Start with the catalyst that broke the tape. A New York Times report, echoed by Bloomberg, says OpenAI is now leaning toward waiting until to go public, a stunning reversal after it confidentially filed its draft S-1 just weeks ago in early June. The trigger? SpaceX. Its June 12 debut briefly made Musk a trillionaire, then collapsed 16% in a single Monday, shedding over $600 billion in 3 days. That spooked OpenAI's advisors on retail appetite for mega-cap AI listings. Why it matters. A delayed OpenAI listing removes the marquee liquidity event the entire AI IPO pipeline, Anthropic included, was being priced against. The bear case is the whole regime. The spend at all costs, IPO into the boom thesis just got a hard reality check, and the Nasdaq's 5th straight losing session proves it. The forward signal, watch Kalshi's repriced OpenAI timeline. If it keeps drifting out, the AI liquidity premium keeps compressing. Story 2 explains why the sell-off has legs. CNBC reports a structural mood shift. Enterprises that once token-maxed, burning frontier model tokens at any cost, now demand clear ROI, tighter cost controls, and cheaper alternatives. That hits Anthropic directly. The company rode the spend-at-all-costs era to a $47 billion revenue run rate, up from $10 billion a year ago, and a valuation near $1 trillion, and it's now filed confidentially for its own IPO. Why it matters. The run rates underwriting those valuations may face margin and volume headwinds, just as Anthropic and OpenAI try to sell public market investors on endless growth. This dovetails with our first story. Softening demand plus a colder IPO tape is a double hit to the 2 AI bellwethers. The bull counter, lower token costs expand the market, pulling in cost-sensitive workloads that sat on the sidelines. The signal, watch enterprise renewal pricing. If discounting accelerates, margins compress fast. Story 3 is where the efficiency shift meets geopolitics. With Anthropic's Fable 5 offline and OpenAI's GPT 5.6 locked to roughly 20 vetted partners, CNBC frames China's Zhipu as the immediate beneficiary. Its open-weight GLM 5.2, a 744 billion parameter model with a 1 million token context and an MIT license, already ranks as the top open-weight coding model, landing just behind Claude Opus 4.8 on agentic benchmarks at roughly 1/6 the cost. It even edges GPT 5.5 on AIME 2026, 99.2 to 98.3. Why it matters. U.S. export and access controls may be inadvertently handing the entire open-weight category and its enterprise mindshare to a Chinese challenger. This ties straight to story 2. Cheap, capable open weights are exactly what cost-conscious enterprises are rotating into. The bear case for U.S. labs. Every week, frontier models stay gated. Zhipu compounds adoption. The signal. Watch enterprise GLM deployment announcements. Each one is share walking out the door. Story 4. After the rout, the buy the dip case is loud. NVIDIA closed Friday near $192, down almost 7% over 2 weeks of AI de-risking. And Motley Fool now calls it the cheapest on forward earnings in 7 years, with Trefis pegging 51% upside over 3 years. Crucially, the fundamentals haven't cracked. Q1 revenue hit $81.6 billion, up 85%, with data center at $75.2 billion, and the Vera Rubin system ships in the second half. Why it matters. This sell-off is sentiment and rate-driven, not a demand miss, a critical distinction for positioning. The bear case, the blow-off phase narrative plus an icier IPO tape, the exact dynamic from story 1, could keep multiples compressed regardless of earnings. The forward signal: if data center guidance into the Vera Rubin ramp holds above expectations, expect a sector rally. If it wobbles, the bubble thesis gains the tape. And we close where the global AI trade takes its temperature: South Korea. The KOSPI ended Friday at 84.11, down 5.81%, with Samsung and SK Hynix leading the declines after Apple flagged rising memory and storage costs, reviving fears that higher AI infrastructure costs squeeze broader tech demand. Why it matters: the KOSPI is the world's AI trade barometer, and with the index still up roughly 90% year-to-date, algorithmic de-risking has amplified every down move. The bear case: stacked Friday catalysts, memory pricing tension from Apple, the OpenAI IPO delay report, and general infra cost angst, all hit at once, and Monday's reopen is the first real tell. The signal: if Samsung and SK Hynix stabilize on the Monday open, the rout is finding a floor. If they gap lower again, the blow-off phase NVIDIA flagged is still running. The through line today: the AI boom's easy money chapter is closing, a delayed IPO, an efficiency reckoning, and a 5-day sell-off all point the same way. The fundamentals haven't broken, but the regime has shifted. Subscribe, and we'll track every turn. This is the Daily Alpha.